So I have friends, advisors, and business associates who tells me that I should not tell you this, but this information is important, and I feel that you should know this. So in school today, we are focused on things such as the SAT. The next thing after the SAT is we focus on the professional aptitude testing. Now that's whether you're going to be a doctor, a lawyer, a secretary, or whatever this is, your professional training. What school fails to train people on is something called financial intelligence. So we never discuss the subject of money in schools. So what do I mean by financial intelligence? Well, let's look right here. If we gave $10,000 to 100 people, 80 of them or 80% will have nothing left. Now with 16%, that same $10,000, they will have $10,050 or whatever you'll get from putting your money in the bank. And 4%, given that same $10,000, they will have $20,000 to $1 million or more. Now that's what I mean by financial intelligence. You see, when we go to school, we learn to read these things, but we never learn to read these things. See, these are financial statements or annual reports, and we never learn financial literacy in school. Now, when I studied finance and accounting in school, it was probably one of the single most boring subjects I ever studied. So I had to create a system that was easy enough for me to understand. So these are the basic forms necessary for financial intelligence. One is called an income statement because it has income and expense. It also could be called profit and loss table. It also has a balance sheet. Now, balance sheet has assets and liabilities. And these are the very basic forms of financial literacy or financial intelligence. Now, I soon realized the main cause of financial struggle was due to the confusion between the definitions of an asset and a liability. So I looked in the dictionary for the definition of an asset and liability, and I got so confused. So I had to make up my own. My definition of an asset is that it's something that puts money in my pocket. And my definition of a liability is that it's something that takes money out of my pocket. So what causes many families to struggle financially is, well, their banker, their accountant, or their real estate agent will tell them that their house is an asset. But by this definition, is actually a liability. Now, if these definitions are too confusing, I'll simplify it even further. You see, my new definitions are this. If I stop working, an asset, it will feed me. And a liability, well, they will eat me. Pause. So the most important thing about being financially literate is understanding a thing called cash flow. Now, I can tell the difference between a poor person and a middle class person by simply looking at the income statement and balance sheets and figuring out which direction the cash is flowing. So I will show you the cash flow pattern of a poor person. So the only income for a person in their job, the income will come in from their job and then it'll go to pay things like clothing, rent, and a little food, and then it'll go out the expense column. Now, this is the cash flow of a middle class person. It's a little bit different. You see, the income will come in, but then for middle class, it'll probably go to things like mortgage, car, payments, credit cards, and then it will come up again through the expense column and then go out this way. So what you see here are the cash flow patterns of a poor person and a middle class person. So the cash flow pattern of the rich is a bit different. You see, the cash flow pattern flows right here from the asset column, and then it goes in to the income column. So the great secret is while the middle class and the poor is focusing on income, the rich is focused on assets. So for those of us who weren't born rich and what we have is a job, do remember every time that you get paid from this job, what you have is that moment of choice. Meaning what you do with the money that you get from your job depends on if you want to be a poor person, middle class, or rich person. So if when you get paid, the first thing you do is directly get new Jordans, get new clothes, go out on vacation, and you directly go into the expense, you're building the habit of a poor person. If you get a new raise and what you do is get a bigger house, get a new car, get more credit debt, you're building the habits of a middle class person. But do remember, you do have the choice. But when you get paid, if you go directly into the assets, you will be directly building the habits of the rich class. Always remember, the choice is always yours. I'll see y'all next time.